Hello viewers, welcome back to my channel. Nvidia has been on a roll. The company's stock has soared in recent months due to the AI boom. Nvidia makes chips that power AI systems, and everyone wants these chips. As a result, Nvidia's value has skyrocketed, now worth over $1 trillion. But not everyone is cheering. NewStreet Research just downgraded Nvidia's stock. This is rare, as most analysts love Nvidia right now. NewStreet thinks Nvidia's stock price is too high and worries it can't go much higher. This downgrade is big news, raising questions about expectations. Nvidia is still incredibly strong, but can it keep growing at this pace? Is it time for a reality check? These are the issues we'll explore. The downgrade doesn't mean Nvidia is in trouble, but it does raise questions. Can Nvidia keep growing at this pace? Or is it time for a reality check? NewStreet Research isn't pulling punches. They think Nvidia's stock is overvalued, not because of Nvidia's business but the stock price. NewStreet believes it's gotten ahead of itself, seeing limited room for more gains in the near term. The main concern is the price-to-earnings ratio, or PE ratio, which is sky high right now. This suggests investors are expecting massive growth, but can Nvidia deliver? Other analysts have noted Nvidia's high valuation but kept their buy ratings. NewStreet is taking a bolder stance, saying it's time to step back and reassess. They think the stock price has gotten ahead of reality. High-growth companies often have high PE ratios, but there's a limit. NewStreet thinks Nvidia has hit that limit and is worried about what happens next. Will the stock price stall? Or worse, could it fall? These are the questions driving their downgrade. Valuation is tricky in tech, and NewStreet's caution is a wake-up call. Pierre Ferragu is the analyst behind the downgrade, known for his tech insights. Ferragu isn't questioning Nvidia's success but is concerned about the stock price. He thinks it's risen too far, too fast, pointing to specific numbers. Nvidia's enterprise value is now 25 times its expected sales for 2025. This suggests investors expect massive growth, but Ferragu wonders if this growth is realistic. He believes most of Nvidia's success is already priced into the stock. From here, he sees limited upside, thinking the easy money has been made. Ferragu's stance is bold, going against the grain of Wall Street opinion. Most analysts are still bullish on Nvidia, but Ferragu is raising important questions. Is the AI boom fully priced in? What could drive Nvidia's stock even higher? These are tough questions without easy answers. Ferragu's analysis forces investors to think critically about Nvidia's future. Let's talk numbers. NewStreet set a price target of $580 for Nvidia's stock, well below many other analysts' targets. Some have targets over $1,000. So why the big difference? It's all about growth expectations. NewStreet thinks Nvidia's growth will slow down, while others expect it to keep soaring. The current stock price is already near NewStreet's target, meaning they see little room for more gains. They're not saying the stock will crash, but they don't see it going much higher. Nvidia's stock has more than tripled in the last year, but NewStreet's view is based on careful analysis. They've looked at Nvidia's earnings potential and the AI market's growth. Their conclusion? Most of the good news is already reflected in the stock price. They think investors are too optimistic about future growth. This doesn't mean Nvidia won't grow, but it might not grow as fast as some hope. This limited growth potential is the heart of the downgrade. NewStreet isn't saying Nvidia is a bad investment, just that it might not be the best place for new money right now. They think other stocks might offer better returns. This challenges the idea that Nvidia is an unstoppable force in the stock market. Despite the downgrade, Nvidia's position in AI is rock solid. They make the best chips for AI tasks, and everyone wants these chips. From tech giants to startups, Nvidia is the go-to supplier. This dominance isn't going away anytime soon. Nvidia has a big lead over its competitors. The AI boom is real, and Nvidia is at its center. Their chips power everything from chatbots to self-driving cars. As AI grows, so does demand for Nvidia's products. This is why many analysts remain bullish, seeing Nvidia's success continuing for years to come. The company's long-term outlook is still very strong. Nvidia isn't resting on its laurels. They're constantly innovating. New chip designs are in the works, and they're expanding into new markets. Nvidia is also working on software to complement their hardware. This holistic approach strengthens their position, making it harder for competitors to catch up. The long-term outlook for AI is massive, and Nvidia is well positioned to benefit from this growth. Not everyone agrees with NewStreet's downgrade. Many analysts remain bullish on Nvidia, seeing more room for growth. Some have price targets well above $1,000, believing Nvidia's dominance in AI will drive further gains. They think the stock price can keep climbing. Why the difference in opinion? It comes down to growth expectations. Bullish analysts see AI as a massive long-term trend, thinking Nvidia's earnings will keep surging. These analysts believe we're still in the early stages of the AI revolution. If they're right, Nvidia could have a lot more room to run. Some analysts point to Nvidia's expanding markets. They're not just in gaming and data centers anymore. Nvidia is pushing into automotive, healthcare, and more. These new markets could drive growth for years. Bullish analysts see this diversification as a key strength, giving Nvidia multiple paths to future success. The contrast in views shows how complex valuation can be. It's not just about current numbers, it's about predicting the future. What's next for Nvidia? The company isn't standing still. They're working on new chip designs that will be even faster and more efficient. Nvidia is also expanding its software offerings, combining hardware and software to lock in customers. Nvidia is eyeing new markets, pushing into edge computing and exploring quantum computing. These moves could open up new revenue streams, showing Nvidia is thinking long-term. Partnerships are key to Nvidia's strategy. They're working with major cloud providers and collaborating with car manufacturers. These partnerships extend Nvidia's reach and create new opportunities for growth. Watch for more of these deals in the future. They could be signs of Nvidia's expanding influence. Investors should keep an eye on Nvidia's R&D spending. This is where future growth comes from, and Nvidia has been investing heavily in research. Will they maintain this pace, or will they slow down to boost short-term profits? These decisions will shape Nvidia's future. They'll give clues about the company's long-term prospects. Nvidia doesn't exist in a vacuum. It's part of the broader semiconductor industry. This industry is cyclical, going through booms and busts. Right now, we're in a boom, but how long will it last? This is a key question for Nvidia investors. The company's fortunes are tied to the industry's cycles. The semiconductor industry is changing, with a push for more domestic production. Geopolitical tensions are driving this shift as countries want to secure their chip supply. This could create opportunities and challenges for Nvidia. They might need to adapt their production strategies, affecting their costs and margins. Innovation is constant in semiconductors, with new technologies always emerging. Nvidia needs to stay ahead of these trends. They've done well so far, but the competition is fierce. Companies like AMD and Intel are pushing hard, wanting a bigger piece of the AI chip market. Nvidia can't afford to slow down. The industry is also facing supply chain challenges, with chip shortages being a big issue. Nvidia has navigated these well, but future disruptions could impact their growth. Investors should watch how Nvidia manages these risks. Their ability to secure production capacity is crucial. It could make or break their ability to meet demand. Nvidia may be leading in AI chips, but they're not alone. Competitors are working hard to catch up. AMD and Intel are investing heavily in AI chip development. This competition could pressure Nvidia's market share and margins. The challenge isn't just about technology, it's also about pricing and availability. Nvidia needs to balance performance with cost and ensure they can meet demand. The field is moving incredibly fast, and what's cutting edge today might be obsolete tomorrow. This requires massive investment in R&D and taking risks on new technologies. Investing in Nvidia requires careful thought. The stock's high valuation means high expectations, and any disappointment could lead to a sharp drop. Investors need to consider their risk tolerance. Can they handle potential volatility? Are they investing for the long term or short term? These factors should guide their decisions. Diversification is key. Even if you're bullish on Nvidia, it shouldn't be your only tech investment. The semiconductor industry is complex and affected by many factors. Spreading investments across multiple companies can reduce risk and capture growth in different areas of tech. Investors should watch Nvidia's financial reports closely. Key metrics to track include revenue growth, profit margins, and R&D spending. These numbers give insights into the company's health and future prospects. Any significant changes in these metrics could signal shifts in Nvidia's trajectory. It's also important to stay informed about the broader AI and tech landscape. Keeping up with industry news helps investors make informed decisions. Nvidia's story is one of incredible success and potential. The company has ridden the AI wave to new heights, driving their stock to record levels. Many see more growth ahead, believing AI's potential is still largely untapped. But NewStreet's downgrade reminds us to be cautious. High valuations come with high risks, and the market has priced in massive growth for Nvidia. Living up to these expectations won't be easy. It's possible the stock price has gotten ahead of reality. Investors need to consider this possibility. The truth likely lies somewhere in the middle. Nvidia's long-term prospects remain strong, but short-term challenges and competition are real. the stock might not see the same explosive growth it has recently. Investors should balance optimism about AI's future with realistic expectations. In the end, Nvidia's future depends on execution. Can they maintain their technological lead? Will they successfully expand into new markets? For investors, it's a reminder that even the strongest companies face challenges.